Welcome to the StockMiner.com studios here in the Black Hills of South Dakota. I'm your StockMiner Brian Johnson, making professional trading simple. And still more chop today. We had a gap up today, making most of the indices, if not all of them, really untradeable today. These gap ups are very difficult to play. If you're not getting long down here or short up in this area here, you're missing these gaps during the middle of these moves, and there's really no entry or no exits to either one of them. So continue to keep your attention on the individual stock plays and try to find some money and some tradable setups through that, because the indices are really not giving us anything. If you're not long from down here yesterday or so, then you missed this gap up today, and there's no trading. It went straight sideways all day long. That same thing is evident on the NDX. Still, it is basing above the 50-period moving average, which I'm seeing on a couple other charts, which is still very bullish to hold above this. This is just a high base formation. You're looking for a push above this to take you back up into the 10,500 area. And at that point, it's up to you if you want to go short, put a little tight stop above it, wait to see if it breaks it. Maybe you want to go short at the 10,500 area with a stop at the 10,520. That's actually a pretty defensible place to take your next trade. Otherwise, we're right in the middle of everything. It's very hard to enter a trade at this part. That's why I'm telling you, keep looking at individual stocks. Here we are, this trading range we've been following for a month. If we don't see a break of this tomorrow, let's watch for one next week. That is options expiration week. I would expect more volatility. Maybe that gives us a more definite break one way or the other. NDX on a 60-minute, here's that gap up, move straight over. See, there's no trading. This little tiny move here, there's no trading there. What do we open at? 1800. Our high was 1808 with a low of 70. I mean, we moved basically 8 points all day long. Really nothing to be trading in here. NDX from a daily standpoint, putting in a little tiny doji candle up here. This could end up being a shooting star. Who knows? Once again, a potential reversal pattern. We will not know until we see what tomorrow's action brings us. NDX on a weekly, though. Now we are at Thursday. 1 day left, and this still looks bullish. This still looks like a high base. Looking for a push above the 1815 mark, and that could take us. Just take us up to 1975. As crazy as that sounds, but from a weekly standpoint, if it just continues to roll upwards, that's exactly where it would head next. SPX on a 60-minute, right, once again holding above this support and almost holding above the 50-period moving average on the 60-minute chart, just as the Dow did. You can see it did the same thing. Straight up and then just base sideways right above that 50. That is still bullish. That is still a high base formation. Looking for a break above this 1105 to take us back to 1110. And then 1112, 1115. There's all kinds of overhead resistance in between 1110 and 1115. Ultimately, a break above 1120 would be the next place for a potential run by the bulls. SPX on a daily, still trapped within the orange trading range, looking for maybe a break above it. If it does, remember I said 1120, it's got to get over 1120. That would be up and above this upper channel line here. So very, very small moves available to you on the indices. I'd still be watching my stocks for those particular setups. SPX on a weekly doing the same thing. Look how it's trickling up. We're at the end of Thursday, and you can see as we continue into tomorrow, we are just still moving sideways to slightly up. It's kind of what we saw here. Up, slightly up, slightly up. This looks very similar to what we've seen on a lot of the daily charts. Now it's happening on a weekly where it's slowly sliding its way up. VIX on a daily, down again today. Still no fear in this market whatsoever. People just they're not getting all that worried coming into Christmas. Apple on a 60-minute, pulling back a little bit today after that huge monster run up. If you're an Elliotician, this kind of looks like a 1, 2, 3. This looks like it could be 4 with a 5 yet to come. We'll see if that works its way out. 4 could come back into maybe these moving averages. That would be a very defensible place to get long Apple if it makes it back to that area. From a daily standpoint, you can see the big run up yesterday followed by the pullback today, but sitting right on top of the 50-day moving average. So a very logical place for it to find a resting place today. Push below it, yeah, push below it. You have to be very careful from a swing trader's perspective if you're long. The 60-minute does look like it's putting in maybe a 5 up, so you're looking for it to bounce off of this and maybe move itself back up into the 20-day moving average. But Apple has just been kind of a mess lately. I'd be very careful playing this going forward. Make sure you get a good hard break above 200 if you wanted to go long for any length of time. Otherwise, a hard push down here below the 195 mark might mean some more selling into Apple. From the weekly standpoint, once again, we're dancing around with this candle here. We'll see where it ends at the end of tomorrow. See if it holds this lower support line for another week. ABT on a 60-minute was up 46 cents today. Had a very nice run yesterday, up and over the 20-day moving average today. Was a very good place to get long, if not from a swing trader's perspective, at least from an intraday perspective. Could have been some money made on that today. AIRM was up a whole whopping 6 cents today. It didn't do anything but hold above its 50, so there was no real trading in this at all. Opened at 33.99. That was the high of the day, so no real trading in this whatsoever. Until it breaks at 34, that might be a place to get long if you're an intraday trader on this. But you're looking at 34.64 as your first line of resistance. CSX moving up today 2.78%. Moved up very well on the gap. Got itself back up above this support area. These support resistance areas are very important to the markets, and they will work hard to try to keep these areas intact if they can. Today we saw a huge push by CSX. And that was, not only did it get back above the support area, but it got back above the 20-day moving average. So if we get another push above 50, still might be a half decent long play there. Dig on the 60-minute, moving up today as well, but pretty much gapping up and then staying sideways most of the day, holding on to this lower support area. EMR on a 60-minute. You can see it gapping up and running sideways just like the rest of it did, but also holding above that 50-period moving average, similar to what we see on the Dow and the SPX. From a daily standpoint, back up into this channel, which is what I warned about when it fell out of it. I said watch for it to, if the markets move up, look for this thing to run back as fast as it can into the middle of the channel. If it gets a break above this channel, still not a half decent long. FAS on a 60-minute, 15 cents today, really just flat, just moving sideways. Still looking for a move. Maybe, I don't know, you might want to take this short below 70 if you're a little bit more speculative. Otherwise, above 72.50 for a short-term long play that could take you back into this 75, 74, $75 area. I'd just be trading these very, very carefully right now. FAZ, you can see it pulling up but staying below the 20-period moving average on that 60-minute. That looks overall kind of bullish to me. Okay, here's a great example. The 60-minute looks bearish. Sorry, the 60-minute looks bearish to me in this little pullback. It looks like it might be getting ready for a push to the downside, but the daily looks bullish to me. Now this looks like a move up with a little bit of a bull pullback. So I'm going to default to the daily chart, and I will go with overall bullish as long as it stays above the 50-day moving average. Still looking for a harder push above 21, ultimately above 21.50 to get bullish on the banks. Otherwise, look for it to fall back down and maybe retest this lower trend line again. We'll see how this triangle plays out. That'll do it for today's video. Just lots of chop today, sideways motion, still waiting for a more major break. A couple other things that we're seeing here within the markets. Now, I will be back with you tomorrow, and then I'm going to give you a forewarning. I'm going to Denver this weekend, spend some time with the family, do some Christmas shopping and stuff. But I will be back Sunday. The question is when Sunday. I don't know if my video will be out early Sunday or late Sunday, but I will have a video for you Sunday. So if I don't have something out in the afternoon like I normally do, just keep checking back. There will be one up before the end of the day to get you ready for Monday's trading coming into options expiration week. Usually like to take Monday into, well, especially Monday, I like to take a little bit easy A lot of times volatility happens towards the beginning of the week and then dies off at the end of the week. And that I see that a lot during options expiration week. And we'll see if that holds true again next week, coming into Christmas, which is going to be a very curious time to see what options expiration does during, coming into Christmas. Is it going to dive? Is it going to hold itself up? I'm really kind of excited to see what happens next week. So anyway, I will be with you this Sunday. Just keep checking back, and I'll be back with you for sure tomorrow night as well. Keep these same areas in mind. This overhead resistance, this lower support, these are your major areas to be watching as we push forward, because they have been for the last month. We've got a pretty established trading range in here. Look for these areas to hold or break and take your trades. Here it is on the SPX. Take your trades as such. So I'll be back with you again tomorrow night.